We live, baby. Good morning, everybody. Welcome. The world has set up for us today on August day. For anybody new, I'm your host, Adam Holland, stock options expert via replay. Congratulations on joining us from the future. I hope it's still as awesome there as it is here, and that it's as full of opportunities each and every day has been within this community. So I'm excited to get going with what we have news, and a whole lot of red in terms. Always, we're here to get 1% better. We don't have to aim for 5, 10, 20, 100%. Just 1%. You do that with consistency. Consistency beats out talent. It even beats out hard work. If you work hard once, really hard, and then you don't stay consistent with it, you're going to lose out to somebody that's consistent. So that's what we aim for, consistency. So make sure you throw that one in the chat signifying your intention to get 1% better by the end of this session, by the end of this day. You do that day over day, you really start to see that compound. And without further ado, I'm going to dive into what we got going on this morning. Our top news, Home Depot, retail watch, investors, and that was just something I always called it in my head as a kid, Home Depot. But investors are paying close attention to the retail space over the next few days. Big box retailers like Home Depot are set to report Q2 earnings today, with Target and TJX companies, who's TJ Maxx, ticker TJX, publishing results tomorrow, followed by Walmart on Thursday. The macro figures may be just as important as individual earnings, with the U.S. Commerce Department releasing retail sales data this morning at 8:30 a.m. Eastern Standard Time, expected to grow 0.4% month over month versus June's lower than expected gain of only 0.2%. State of the consumer spending patterns on goods will be eyed closely, especially for items like apparel, food, furnishings, and electronics. Earnings reports will also give a closer read on consumer behavior and their response to the current price environment. If costs rise by a smaller amount or even dip, that can impact spending patterns, especially in an era of low unemployment. More spending can also influence margin estimates and inventories, which could show up in retailer guidance. Now, the figures should additionally prove a better assessment of the U.S. economy, which appears to be on stable footing. Gross domestic product grew at an annualized rate of 2.4% in Q2, helped by strong consumer spending, while Fed staff subsequently canceled a prediction for a U.S. recession, giving the resilience of the economy. It still took some time for Wall Street to get the memo, with B of A recently revising its outlook to favor a soft landing, while JP Morgan bailed on its mild contraction that was set to come as early as next quarter. In terms of further insights for a full breakdown of earnings season, check out Seeking Alpha's earnings calendar, blah, 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 Seeking Alpha plugs. In terms of Home Depot, I thought that they were going to reveal what they reported. Home Depot already reported earnings, so let's see if we can scope that out here. Okay, reported a second year fiscal year 23 sales decline of 2% year over year to $42.92 billion, beating the analyst consensus estimate of $42.25 billion. So HD beating on earnings. Customer transactions for the quarter fell by 1.8%. Blah, 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 a lot of other things going on. I think they also announced a buyback. Yes, buyback. The board of directors also authorized a new $15 billion share repurchase program effective August 15th, 2023, replacing its previous authorization. Let's see. Home Depot sees sales and comparable sales decline of 2 to 5% versus the $152.28 billion estimate. So overall, I don't think it moved tremendously. Based off the data, at least last time I checked, it looks like if anything, they're looking to open slightly lower, just like everything else. But Home Depot, of course, as a post-earnings candidate, is something to keep on the radar here, right? If we see it, peak below and fail on 327 and end up holding that level, then, Home Depot calls for the intraday play back up to those pre-market highs, to the 329 level and then to that 332 level. Could be on the docket here. So Home Depot, after earnings here, is on the docket for a post-earnings play. Potentially, we shall see. Depends on that type of movement that we get at open. Overall, Home Depot on the daily has bearish potential. If it can't get over 335, it has the chance to double top. And if we close beneath 320, 339, Home Depot can fire a daily double top down. And the puts are filing into put city if that's the case. So I'm gonna go ahead and set some alerts for that just in case. You guys are seeing the process live here as we go through and just break things down. I mean, this is literally how it goes, right? Some people use scanners, other people use, code. A lot of people use a lot of different things to find trades. I just prefer being plugged into what's going on, in life, and then setting alerts as I go. And like I said, as you put in, a little bit of time each day, get 1% better each day, it starts to compound, and suddenly you wake up every morning and you've got all these different alerts, right? All these different potential trades that you can act on immediately. But it takes just a little bit of effort, right? You guys see me here, in the morning doing this live. And, I'll take a few minutes here, a few minutes there from just sitting on my computer. Oh, let me take 10 minutes, scope around, right? Look at some stocks, check out some news. In terms of trending news, the AI conversation, responses to this week's WSB survey are coming in fast. With already 3,000 respondents participating in the poll. Take the survey and see the results on whether publishers should be required to use a disclaimer when using artificial intelligence. I don't really care about that. Trending news, take our survey, blah, blah, blah. In terms of financials, smart money, the 13F filing season is here, giving investors a chance to see what hedge funds with at least $100 million in assets under management bought and sold during Q2. Warren Buffett's Berkshire Hathaway added new holdings in home builders like D.R. Horton, whose ticker is DHI, NVR, and then Lennar. So their ticker is NVR, and then Lennar, their ticker is LEN, sending the stocks higher in pre-market trading while reducing and divesting stakes in Activision Blizzard, Chevron, and McKesson. Michael Burry's Scion Asset Management ditched positions in bank stocks and Alibaba, while investors also eyed reports on David Tepper's Appaloosa and Elliott Management, among others. Note that long positions and call and put options are disclosed in the filings. Those shorts aren't included in the statements. Of course, it was all over social media yesterday that Michael Burry literally has like his whole portfolio now in SPY and QQQ puts. So, that's just something else to add to the bearishness. Now we have all the lemmings coming in like, oh, no, I'm bearish on the market, blah, 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 blah. Right, that's how it goes. But, you're a lot better off when you can do your own analysis and make your own moves and do so with conviction without having to get a cosign from anybody else. And you can also have faith in that analysis, right? Not just hoping that this is one of the times that Michael Burry is right. He's famous for the Big Short, right? But he's also called a lot of other crashes that haven't materialized. So I'm mixed on Michael Burry, right? I mean, he definitely, has some skill. If you haven't seen The Big Short, it's one of my favorite movies. Definitely got some skill, but also makes a lot of calls. So people, he's got a lot of critics and he's got a lot of believers. So polarizing figure, right? Like anybody else in 2023. But I mean, dude literally is fully bearish. And again, some important caveats to remember are that these filings are disclosed after the fact, right? These happened months ago, right? They took these positions June, right? May, June. It's now middle of August. So, technically he could not even be in these positions anymore. He could have gone full ported shorts on the whole market and been out and been profitable, right? Because the market has gone down since. So I think that's what's important to remember is that you don't just go and, say, oh, well, now, since Michael Burry's short, it's time for me to go short. We don't know if he's still short, right? That being said, I don't think you take that large of a position just to be in it for a month, but who knows, right? Who knows? I can't see inside of his head, so I have no idea. But I think it's just important to make sure that you're kind of honing your mindset when it comes to breaking down this information and, kind of taking some things with a grain of salt and, just how you should break things down, how you should parse through info. It's important to recognize that because everybody sees, oh, the guy from The Big Short from 2008, he's short now, and he's short like a lot. Like, my guy went like 51% SPY puts in his portfolio and 49% QQQ puts with the other part of his portfolio. So, it's not a small bet. It's just we don't know if that bet is still on, right? He could have closed it already. We also just don't know the totality of what his game plan is. So just take it with a grain of salt and make sure that you can do your own technical analysis. And if you can't, you know what to do. Hit AdamHallEducates.com. Enroll in stock options made easy. Join the crew, and you can save the biggest discount ever at this point by using code MyTurn at checkout. So make sure you check that out, or anybody that's out here YOLOing their money in markets and struggling to get by doing so, make sure you get them in there to get them educated and ready to go. In terms of tech news here, big ambitions. Netflix is moving forward with its video game aspirations as it begins limited testing of games on TVs, PCs, and Macs. I don't know how you play games on Netflix, but we'll see. They had that one trivia game that we did play. I played that once. The company will start with 2 titles in the UK and Canada. Oxenfree, a thriller made by Night School Studio, acquired by Netflix in September 2021. The gem mining arcade game Molehue's Mining Adventure. While the streaming pioneer launched mobile games on its app 2 years ago, it is now looking to make the games available on every device. In April, Seeking Alpha analyst Alan Greathouse said Netflix's video game offering was challenging, but noted that it has a big head start given its huge customer base that pays into a recurring revenue model. So Netflix trying to diversify, its revenue streams. It's proven, that once people spend money once on a game, they're willing to continue to do it. Microtransactions are very addicting. Once you pay 99 cents for something, you're willing to pay 99 cents for it like 1,000 more times. So that's what they, kind of warn about games, is that once you break that spending barrier, you will continue to spend on that game and not really think about it because 99 cents, $1.99, $3.99. And you just think, oh, that's nothing. And then you look at the end of the year, you're like, oh my God, I spent $500 on freaking Candy Crush. Was one of the reasons why I never got into games like Candy Crush or anything else. But yeah, I think again, it further underscores that idea of you should always be looking to diversify your income streams. Not even Netflix is complacent, right? None of these companies are complacent. They don't just say, oh, hey, we make all this money, we have all this recurring revenue, time to sit on our butt. No, they're always looking to get better. That further underscores why we're here each and every day. Always looking to get better, always looking to continue to find an edge, always looking to refine what we do, always looking to diversify into new things, right? You don't just need to do one thing and then stop. You don't just get a good job, right? Good job back in the day, they say get yourself a good government job. You don't just get yourself a good government job and stop there, right? Get yourself a good job wherever it is, right? Or, if you're the type to start a business, right? But you also need to be investing in the stock market, investing in crypto, if that's your thing as well. Investing in real estate, right? Investing in all these different things, investing in startups, right? Venture capital, buy some vending machines, there's so many different things that you can do. And it's just important to make sure that you're not complacent because one stream of income is way too close to none, right? It's literally one letter away. So make sure that, you don't get complacent. You're always looking to grow, diversify, change because you don't know what's going to be the next big change in this world. And with stuff like AI, you got to make sure you have more than one, right? Because if they're one ChatGPT upgrade away from you being 6 months out to not having a job anymore. Being completely honest. And I have an uncle who's an executive at Microsoft, and they have already multiple iterations in the future of ChatGPT, right? So when we're talking about AI and AI replacing jobs or you getting replaced by someone who knows how to use AI, it's not a joke, right? It's just like the iPhone. They have 10 iterations of the iPhone in the future, but they drip them out. They do the same thing in the US with everything else. So same thing with AI, right? You're like, oh, ChatGPT can't do this yet. For all you know, it can't do that yet, right? But you're not on the inside. You don't know exactly what those capabilities are. So that's why it's got to be a relentless pursuit, again, of 1% better every day. And that way you go to bed feeling fulfilled too. You don't just go to sleep like, oh man, today that I'll never get back was just all right. Like, no, I gave it my freaking all today. I learned at least one new thing. I can go to sleep and say that I earned the right to live on this earth, right? That's what you want to do every day. Earn the right to rent this skin suit and be able to go out and accomplish your dreams. So in terms of today's markets, in Asia, Japan, we're up 0.5%. Hong Kong, we're up 1%. China, Hong Kong down 1%. China down 0.1%. India closed. The FTSE in London down 1.4%. Paris down 1.2%. Frankfurt down 1.1%. The Dow down 0.6%. S&P down 0.6%. NASDAQ down 0.6%. Crude oil down 1.1%. Gold down 0.5%. Bitcoin down 0.1%. Bitcoin just been hanging out, 29K. Today's economic calendar. Retail sales at 8:30. That's a little bit of data there that could be important. Business inventories. Yeah, the biggest thing today sounds like retail sales. Nothing else really looking super important. That already came out. What else is happening? U.S. Steel extends gains as S-Mark jumps in with higher takeover bid. So it looks like everybody's trying to buy U.S. Steel, and the stock just keeps climbing as a result of it. For you guys that don't know what their stock ticker is X. But yeah, they gapped up off of like reports that I forget what company it was tried to acquire them, but there's a lot going on in the metals sector right now, right? In this whole kind of metals, materials, industrials arena. And US Steel, right? There's some people looking trying to purchase it. We talked about FCX, something that we're keeping an eye on here. FCX has seen some unusual activity. So, of course, it's going to be somewhat speculative when you're going in based off the news. I always want to have some technicals undergirding it, but it's also fine to deal in some speculative things that have technical potential. Insert Penn from, what was that, last week, right? When I talked about how Penn had the opportunity to explode, and then Penn goes and, discloses the fact that they're separating from Barstool and have a new partnership with ESPN, and Penn stock skyrockets. So it all comes down to risk profile, right? And you just, as long as you're fine with the risk, it's cool to take some upside plays because the market can be fun, right? And trading markets can be fun. It doesn't have to be all, kind of stuffy, and we can have some enjoyment with it. Russia's central bank sharply hikes interest rates to stem ruble crash. Saudi Arabia, UAE buys thousands of NVIDIA GPUs for AI. Montana judge sides with youth plaintiffs in landmark climate change case. PayPal names Intuit's ticker INTU Alex Chris as its next CEO. Economy Watch, China cuts policy rate, halts youth unemployment data. This was big. China had a lot of important headlines overnight, like a lot. So the first big one was they're going to stop reporting youth unemployment rate. They just didn't report that from August. So unemployment rate in the age of 16 to 24, that category has soared to record highs in recent months and reached a record high of 21.3% according to the June report. So we've got a ton of young people that are just unemployed, and so much so that they're not reporting that figure anymore. China's just like, yeah, we're not going to tell you guys that. And then they unexpectedly cut interest rates on one-year loans by 15 basis points to 2.5%. So they're trying to do something. China's like, cut interest rates, like do something in order to jumpstart our economy right now because things just aren't looking good. So they're really scrambling here. The central bank also enacted a reverse repurchase operation of 204 billion yuan through 7-day reverse repos and cut borrowing costs to 1.8%, down from 1.9%. So they tried to do something, to cause bullishness, but overall there were two bearish points, and here comes the second one. China's July industrial output and retail sales missed expectations. So China's industrial production and retail sales figures for July both missed expectations, adding to the weak batch of economic data seen by the country. So we miss our July industrial output in China. We also miss retail sales expectations, right? You could kind of bunch those together as one bearish thing, but they're really two separate bearish things. Then they also just stopped reporting youth unemployment, and they tried to help by cutting interest rates, but didn't really seem to help much, kind of given the movement of these tickers overnight. So we'll see. Again, we could open up today and push, but we've got all of our friends overseas in the red, in Europe and in China, and we're opening, starkly red here. It's not just a casual kind of 0.2, 0.3, 0.6%, right? Down 0.6%. Pretty significant. So again, SPY lost that weekly uptrend support, so we remain bearish on the weekly. There's speculation that we could have some falling wedges on a number of different tickers. That's what kind of the bearish case, but at this point so far, every pop that we've seen has gotten sold off. So we need to have some type of pop with some conviction, and it's just not seeming like that's the case here. Yesterday we got that push in the close. We could have pushed higher overnight, but it looks like literally middle of the night, like 1 a.m., we just began to tank, maybe based off of China news. But yeah, we'll see. We'll see what the market has for us. But so far on the weekly, things continuing to look bearish. We could chop around this week for like the most bullish possibility, but unless we get back above, back way above, we're probably talking like 453. Unless we finish above that 453, 454 area by end of week, we remain bearish long term. So that's where we're at with things, right? And we're just chopping around. This 444 area is tough. But, we just keep knocking on that door. Eventually, we're going to fall through the floor, especially if we don't get any type of reversal. So that's what we're looking at with SPY right now. And China just, kind of coming in again with more negative news. We've been talking about them over the course of the past few months, how they've been weak, right? Real estate really killed them, and it was a downward spiral from there. But, with them trying to cut rates and do all this stuff, and it's still not working, not a great sign. UBS, ticker UBS, to pay $1.4 billion to settle crisis-era mortgage bond case. Ron DeSantis calls Bob Iger to drop Disney lawsuit. Nvidia rebounds as recent sell-off seen as good entry point. Okay. Apple expected to unveil major changes to watch next year. Thanks for that. But that'll wrap us up for today's session. We went over a lot of important things, and we also covered, kind of some sentiment on different tickers moving forward. Tons of golden nuggets dropped. Just make sure that you're using your specialized knowledge in order to leverage those little knowledge nuggets for your financial gain, right? That's what we're trying to do, get better and make money, right? That's the ultimate end game. So thank you for tuning in, everybody. If you enjoyed it, show love to the accounts, right? Like, comment on all that amazing free content that continues to get pumped out. And make sure that you have any friend that needs help in markets. They need to learn how to trade, learn how to invest, learn how to see things with a holistic view to not only make good market-related decisions, but good life decisions. Make sure you send them to adamhollandeducase.com. Tell them to use my turn at checkout and come join the winning team. So everybody else, right? Have a great day, and we'll see you tomorrow for our next Premarket Prep session. Have a good one.